Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Steve Davis, manager of the Jupiter UK Growth Fund, to give his 3 stock picks. Hi, Steve.
Good morning.
So what's the first stock today?
So Lloyds Bank is the biggest single position in the fund. We've had some really good news from them in the last few weeks that they're now starting to pay a proper dividend. I think there's a lot more to come on that front, and this is at a time when a lot of the big resources companies, for example, are cutting their dividends. So there's a gap for Lloyds to step up into. The profits of the business have really improved dramatically over the last 5 years. It's been more, can we as shareholders see those profits as dividends? So the regulator's been demanding more capital to stack up on the balance sheet. We're kind of reached the point where enough is enough on that front. And then the other big drain has been PPI. And we're not done there yet, but hopefully we're going to get a time bar on that. So as those things drop away, the underlying profits of Lloyds should come back increasingly to shareholders and should support a much higher share price than we've got at the moment.
And as you say, it was a leap of faith initially, those that took a bet in Lloyds, but it looks like that bet's coming off.
Yeah, I think that's the key now. This isn't something that's 2 or 3 years away. We've had real concrete news. You know, they're paying 2 3/4p dividend this year, and it could be an awful lot more in 12 months' time.
And what's the second stock today?
So one I really like, it's quite a recent addition to the fund, is Merlin Entertainments, so the operator of Alton Towers and Legoland and things like that. And I struggled to find a more visible long-term growth story. So they're going to be opening Legolands in all sorts of places. I think it's Dubai this year, Japan and Korea over the next couple of years, but increasingly in China and other parts of Asia as well. So I can see their growth story out to 2030. And there's not many companies, particularly in the top end of the FTSE 100, that you can say that about. I've been tracking it for a long time. Since it IPO'd, it had always been a bit expensive. It's a company that lots of people like. But the opportunity came last summer. The market sold off and they had the accident at Alton Towers. And that was our chance to get involved.
Of course, we've seen the pattern before where a company that's successful in the UK expands internationally and actually they don't pull it off. What sort of gives you faith, especially at a time when global economy looks uncertain and growth is being downgraded, that this is the right time?
I think the key for them is that they're piggybacking on the strength of the Lego brand. And through a combination of the movies, the broadening of the franchise that the Lego brand is doing, that gives them a very good head start. It still means you've got to pick the right local partners, particularly when you're getting involved in China and markets like that. But they're not sort of flying blind in that sense.
And what's the third and final stock?
So the third one's it's a less well-known company. It's called Sirius Minerals. So they're building a huge fertiliser mine up in Yorkshire, creating a lot of jobs up there. There's a lot of talk in the market at the moment about mining stocks sort of flying up 20% and down 20% on a daily basis. I don't want to get involved in those. This is something where I think I can add much more value. We've been involved in it for 3 years already. I own about 7% of the company. We're going to now spend the next 4 or 5 years actually building the mine, but they put out a feasibility study recently, and I can see them being capable of generating more than $1 billion of profit once the mine's up and running. And you know, the market cap of that company is only 300-400 million at the moment. So a proper, patient, long-term investment, but with a really exciting upside.
And something we really like to hear about here, you know, British industry being supported and growing.
Yes, exactly. These big projects, it's something of a rarity, and it's going to create a lot of new jobs up in Yorkshire where they're much needed. So it's nice to be able to be supporting that as well. That's sort of on top of the financial argument as well.
Steve, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.